This tutorial is presented to help the user correctly enter information into the HB13 estimator. The first step is to access the noproptax website where the estimator can be found. The website is noproptax. Once there, scan down the homepage until you see the Estimate Your Tax Impact icon. Select this icon. The next step is to respond to the "Do you rent or own a home?" question. Select the appropriate circular icon. In this case, the user has selected Own. Click on the slide bar and slide to a monetary value that is closest to your school district property tax bill. In this case, the user has selected the Pennsylvania Independent Fiscal Office estimated statewide average of $2,500 per year. Scanning down, the user will see three possible selections under Total Household Income Yearly. Make sure you are using total household income if applicable. Please note there is a lowercase I in a circle. If you hover over this icon, additional information will appear. The user can select one, two, or all three selections that are applicable to their situation. As we go through the examples, they will proceed from straightforward to more complex. Please note, for those that are married and filing separately, the user must add income from both wage earners. Case 1 will reflect a total household income with no rental income or retirement income. The user must enter total annual income, not weekly or monthly income. $50,000 is entered in the earned income wages, salaries, tips, etc. field for this case. The user tax impact results will appear in a results table. The estimated taxable income should agree with the earned income wages, salaries, tips, etc. field, which it does. To summarize this case, with a school district property tax bill of $2,500 and taxable income of $50,000, a tax savings of approximately $1,360 per year is realized. Case 2 duplicates Case 1 with the addition of unearned income of $4,000. The user would select unearned income such as rental income and enter $4,000. The earned income wages, salaries, tips, etc. field plus the unearned income such as rental income field should equal the estimated taxable income, which it does. In this case, a tax savings of approximately $1,278 per year is realized. Case 3, for this case we will shift to a household receiving only retirement income. If any other fields are still selected, the user must clear by clicking on any icon containing a checkmark. The checkmark will be removed. The user would select the retirement income pension /401k/403b/ etc. icon. Two income options will appear. The first is Social Security or equivalent or military pension. Note, there are other forms of income that are not taxed under HB 13. Disability, retirement, or other payments arising under Workers' Compensation Acts, Occupational Disease Acts and similar legislation by a government. Payments commonly known as public assistance or unemployment compensation payments by a governmental agency. These are the most common, the remaining are infrequent, therefore, do not apply to many. For these special cases, the user would be advised to contact a tax professional after bill enacted. The total income entered in this field is not taxed under HB 13. For this case, $20,000 is entered. Please ensure value entered is annual income. When entered, the user will see the results table appear and estimated taxable income should be $0 at this point. The second income option is distributions from 401k/403b, IRA, pension, etc. For this case, $30,000 is entered. Please ensure value entered is annual income, not total investment value. This information would typically be found on a 1099. When entered, the user will see the results table appear and estimated taxable income should be $30,000 at this point. If the user enters any value into the distributions from 401k/403b, IRA, pension, etc. field, the user will see a new option appear on screen: how much of distributions were already taxed. HB 13 does not double tax. For many savings vehicles, the employee made contributions to the plan. Any contributions going in were already taxed under Pennsylvania tax code, thus, they are not subject to being taxed upon distribution, going out. Note, this will change when HB 13 is enacted. HB 13 has two options for estimated taxable income reduction. HB 13 provides a default 15% cost basis reduction. The estimator does this calculation for the user. If the user chooses to use the default 15%, the user would enter the value shown in the "If you've made contributions," enter the actual amount on the next line, or 15% the default deduction, whichever is higher field. If the user can determine their total lifetime contributions cost basis to an investment vehicle, then divide this value by the total value of the investment vehicle for the current tax year, the user can enter this value if greater than 15%. For example, the user had total lifetime contributions of $80,000 and the investment vehicle value is $400,000 for current tax year. $80,000 divided by $400,000 is 20%. Since the 20% is greater than the default floor HB 13 provides, the user would enter a 20% reduction value. The user would need to do this calculation separate from the estimator and then enter the value in the "If you've made contributions," enter the actual amount on the next line, or 15%, the default deduction, whichever is higher field. Please note, cost basis percentage would need to be updated every year due to underlying investment fluctuation. For this case, the default 15% reduction amount of $4,500 is entered. This amount should be reflected in the estimated taxable income. To summarize this case, a household with a school district property tax bill of $2,500 and taxable retirement income of $30,000, a tax savings of approximately $1,030 per year is realized. Case 4, it is possible to receive unearned income and/or retirement income while still employed. For this case, the total household income includes earned income, rental income, and retirement income. The user would select all three options. For this case, previously entered income for each of the three income options is used. To summarize, for a household with a school district property tax bill of $2,500, earned income of $50,000, unearned income of $4,000, and retirement income of $30,000 from a 401k/403b, IRA, pension, etc., and using the calculated contribution cost basis deduction amount of $4,500, a tax loss of approximately $48 per year is realized. The estimator calculates time you have to wait to realize a benefit, which in this case is 0.6 years. The tutorial is provided for guidance only. Please consult a tax professional for additional help.